Vladimir, what's your maximum loss per trade when you don't have losses? So you're starting off the day. What's your maximum loss per trade? I'm gonna prove this to you. $75 on a single trade. Okay? Now, this is a $90 stock. Okay? If you take this short right there, boom, see that short? You say, my stop is here. Why am I drawing so terribly today? My stop is here. Now, let's see what that is. Okay? So let's call it, you're going to go short at 50. You're going to stop out at 60. Let's call it 67. So we're talking about 17 cents. Okay? Now, your maximum loss is $75. How many lots can you do and stop out and still stay less than $75? So how, if you're willing to lose 75, how is 4 or 5 lots risky if 4 or 5 lots still loses you less than 75? It's not the lot size. Listen, you know what's risky? You are. 5 lots aren't risky. MU isn't risky. Stocks aren't risky. Lot size aren't risky. You're risky. You know, you're the riskiest thing. You're the riskiest part of the trade. If you do what you're supposed to do, then you remove the risk. If I were in this program and I wanted to graduate, some of you want to graduate and shouldn't want to graduate right now. But if I wanted to graduate, you know what I would do? I would trade higher price stocks and trade big size with small low risk entry moments. You understand? And I would have more alpha in my trading that way, and I would get to graduation faster. Like finding moments like this in a higher price stock. It makes the trade somewhat asymmetric. So my loss is always small with the high share size, but the high share size makes my gains big. And isn't that the proper formula for trading? That when I lose small. When I win big. So the loss stays the same. My gains increase because of 2 things. My gains increase because I'm trading a higher price stock. And my gains increase because higher price stocks obviously have higher alpha. Right? And so I could go really high. Like, let me show you. Let's do BABA. Guys, look. I'm just going to give you an example. Look at this opportunity off the 20. So let's go over the numbers, right? I'm going to buy above the high of this bar. That's 07, so 31.07. The low of that bar is 71, so I'm going to stop out at 70. So that's 37. So I can do, if I have a $100 loss, I can only do 2 lots here. All right, but still, 2 lots keeps me well within a $75 stop. And, you know, here's your profit take right there. You get like what out of the trade? Let's say you sell here. You get 70 cents out of the trade. You know, so that's $140, and you were risking 65 or whatever it was. Right? So like that's how I would graduate. Let's take this. You see this? You've dropped violently under the 20. Now you're going to look for a very low risk point. You see this topping tail bar in the range of the violence. Maybe you want to try that. And let's see. Look, let's see what this is. You got to, because we're playing a high price stock here. So you got a high of 31, so you're going to stop out at 32. You got a low of 87, all right? So that's 30, 40, let's call it 45 cents. All right, so in this case, all right, maybe if you have $100 stop, and a lot of times you will because you can borrow a little bit from other gains if you want to stretch a little bit. It's like, okay, I'll be willing to lose 100 here. So you're going to take 2 lots. All right. Now, what is that gain? You were risking, you were risking, I don't know, like 95 bucks. And if you manage to catch this whole thing and stop out there on the bar by bar break, what did you get here? 130.50, 132.70, 70. That's crazy, right? With 2 lots. So that's $400+ on one play, and you were risking 95. That's the asymmetric bet. I would play the higher price, play bigger size, but find very little moments. And I would graduate that way. Do you follow what I'm saying, guys? Does this make sense? So I don't want you to think that high price is riskier or more lots are risky. That's not it. You can make it not risky. The risk doesn't come from the size as much as it comes from you doing the wrong thing, right? Not finding the right moments, all right? And, you may not want to go as high as 132. I just wanted to show you something really high. But $70, $80, $90 stocks, right? And so let's see. Let me get a few. So you got the MUs. I would do like low 100s. Look at Oracle. Like, guys, these little moments, man. You can really load up. All right? And play, use your ammunition. Here's a little low moment. It didn't go very far, but you're not going to lose on that. You're going to get something out of that. Right? And so, if you really do lose, let's say you didn't do anything with that and you lost here, all right, it's still very small, right?